Hey everyone. Given the rising competition in the EV industry with many competitors, including Tesla, announcing huge price cuts, I wanted to discuss Rivian's pricing strategy and how Rivian plans to achieve its goals of ramping up production and ramping up sales. And so in this video, I'm going to review that. I'm going to review Rivian's pricing strategy, looking at a question and answer session that Rivian management had with Wall Street investors. So let's begin. Starting with the question that comes from John Murphy from Bank of America Securities on May 9th. He says, there are some folks that are taking the view saying, hey, listen, I can cut my upfront price on the vehicle and not make that much money on the sale and make up the profitability on the back end from the lifetime revenue and profit opportunity. So what this analyst is referring to is selling a product, let's say a car, at maybe break even or maybe even at a loss, with the hopes of making up the profitability in the long run through other means. For instance, maybe making software sales or maybe making service sales. So taking a loss just to get the customer in your ecosystem and then trying to profit down the road, which is something which I think the analyst is referring to Tesla here, because this is very similar to the strategy that Tesla said they are now implementing, and you can see that with the several rounds of price cuts. Tesla saying that, you know what, we can afford to take lower profits on each car we sell right now because we plan to profit more down the line when we sell other software upgrades like, let's say, autonomous driving. So this analyst is asking Rivian, do you plan to do something similar? Are you following that strategy? And so, he's saying, I'm just curious, how you think about the company and the strategy if you ever think about embracing something like that. It's a really good question. And so the CEO of Rivian comes on and says, you know what, over the course of the next several months, we're going to be launching our Max Pack, which introduces higher price variances of the R1. And we will also be introducing our dual motor with enduro drive unit, which introduces our entry configuration. So we're both going to be growing pricing on some variants, but also offering some of our lower price variants at the same time. So initially, the answer here from Rivian management is we're not going to just lower prices across the board. Instead, what we're doing is trying to have a price point that hits every consumer price point, right? So if you're a consumer that's looking for a Rivian truck at the $90,000 price point, they're going to have something for you. If you're looking at the 60,000 price point, they want to have something for you. So they want to have something for you at all of those price points to sell to you. The CEO goes on to say a significant portion of our customers are looking for the best of the best. So Rivian saying that we have premium customers. We have premium top of the line customers that are looking for best of the best, best in class products. But more broadly speaking, as we think about the business in terms of revenue opportunities beyond the initial sales, not only our full software stack, but importantly, what we're building with autonomy. So Rivian is also building autonomous driving technology that they hope to sell to the customers that buy Rivian cars. A lot of work is underway right now in our next generation platform for new sensors, updated sensors, as well as computing, which will allow us in the future variants and future products to really over deliver when it comes to the level 2 and level 3 self-driving feature set and enable our ability to monetize that as well. So Rivian fully expects to monetize on that software sale selling the autonomous driving. So they do expect to monetize that, but they're not specifically saying, look, we're going to take a loss on our cars, on the physical sale of the car, so that down the line, when the autonomous driving software is ready to sell, we can make up the profits then. They're not taking that strategy. And beyond self-driving, there are other opportunities to create meaningful recurring revenue. And some examples they share with us here are the insurance product with some of the financing products also. So Rivian agreeing with this analyst saying, look, we agree there's a lot of ways for us to monetize these customers down the line, but we're not going to sacrifice our goal of achieving positive gross profits by 2024. We're not going to say we're willing to sell our cars at a break even or loss so that we can make up for that later on down the road with maybe recurring sales or returning customers and those types of things. So that's good news, not only for Rivian stock investors, but for the industry overall. As I've been saying, when one company cuts prices, that's bad news for the industry overall because that's going to result in several other companies cutting prices to compete with the one company that cut prices, especially if the one that cut prices is one of the industry leaders like Tesla is. It leads to many more price cuts, which decreases profit margins, which is good for customers, but bad for investors. What Rivian is saying, they're taking a more moderated approach. They're not saying we're going to cut prices too, we're going to battle for market share, we're not going to let others take market share. So that's good news for the industry. If you're an investor in the EV industry, let's say you have Tesla stock, you have Rivian stock, you have other EV company stocks, this should be good news that Rivian is taking a more moderated approach to pricing. All right, that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.